Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, on this wonderful Wednesday for what is going to be nothing short of another jam-packed daily market update. If you are finding yourself on my channel for the first time today, don't forget to check out that subscribe button because we drop an update just like this one every single day around 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening in the crypto space, but also the broader markets, and that's exactly what we're going to be doing in this video. We've got a hell of a lot to get into with you. Today, of course, is the day of the Fed rate decision. Now, the probabilities of any change to their interest rate policies are next to none. So that means they're going to likely be leaving rates where they are. However, what's to follow that is a economic forecast and Jerome Powell giving a statement, which may be revealing. We'll start the video off there. Then we're going to talk about what Bo Hines, who, of course, is the executive director of the Presidential Council of Digital Assets, had to say yesterday in regards to a Bitcoin strategic reserve. He very much says that we want as much as we can get. Now, they have to do this in a balance neutral manner, which means they can't actually add it as an expenditure, but they can perhaps come up with genius ways of accumulating Bitcoin. Then we'll look at the Bitcoin price chart. You know, I am still exceptionally optimistic on the outlook for risk broadly. I'm actually more of a fan of Trumponomics than not. I know that that makes me quite polarizing for many people out there. Just my own take. I happen to think that risk markets are going to do very well in the up and coming years, and we need some more clarity on everything. And we might get that with the Fed statement or Jerome Powell statement after. Then we're going to talk about what's happening with the European Union and how they've now approved digital ID wallets. And we'll be linking this to, of course, what Christine Lagarde had said a couple of weeks ago in regards to the European Union or a Euro CBDC being launched in October this year. A digital surveillance state, financial state, is being essentially created in Europe. Now, digital IDs actually have pros. They also have cons. The pros are it makes things far more efficient. It's an evolution of the kind of world as we know it, and crypto's very much at the heart of it. However, the downside really predominantly is your privacy. Financial privacy is going out the window, and with CBDCs, there's a hell of a lot of things that they can actually embed in them, like the trackable nature of them. And finance is quite trackable as it is, but it happens to more of a degree. And then you can talk about sort of social credit score systems and things like this. Also, UK is now launching procurement of digital guilds, and they're working with Finality to do this. Finality is a kind of player. And then we've got news from David Sachs in regards to what President Trump is doing over with Russia and Ukraine. So I am far more optimistic than I think many people. Today, of course, is the day the Fed are set to make a decision. So the Fed will update its rate projection on Wednesday, being today. What to expect. Fed officials, as this week's meeting, are expected to hold interest rates steady, but adjust their view on the economy and possibly the future path of interest rates. I think by the end of this year, according to their dot plot, they're looking to get rates to around about 3.7%. So we are going to see an easing as far as rates go. People will be looking for their policies, obviously, on rates moving forwards, what they have to say about it. Are they going to have a hawkish, dovish tone? The markets will look to anchor on that. And of course, QT, which is still ongoing. Now, QT, I think many people equate QT to many things, but as I think it's broadly going to be referred or should be looked at as is essentially it's to do with their balance sheet. Are they easing? Are they adding to their balance sheet, or are they reducing, which is what they're currently doing? And they're doing that through allowing their sort of treasuries to mature. The question is, how long can they continue to do that for? Because the debt system or the treasury system is at the heart of finance broadly. And can they go much longer without actually bidding it up? You got the likes of Stan Druckenmiller. Who was the other one? Is it Paul Tudor Jones? Might not be. Let's just go with Stan Druckenmiller for now. Actually short the likes of TLT, which is the 20-plus year treasury market, essentially, or debt markets. The committee could maintain its outlook for 2 cuts this year. I think they're underpricing that. Remove one or both. Or, improbable, add another as statements of concerns over potential slowdown everything seems to be on the table, and the markets are essentially reacting to that uncertainty, and the sort of statement made there is everything is on the table. So there's not a clear guidance moving forwards in regards to what they're going to do. There's a lot of uncertainty. A lot of things can change. There's been a revision based on tariffs and things like this of an economic outlook. That there needs to be clarity on. Markets don't like uncertainty. With uncertainty, people will essentially hedge that uncertainty. If the probabilities of a recession go from 10% to 30%, still 70% unlikely in my opinion, they will look to position accordingly and take out insurance, if you will, on all of that. So Chair Powell and his colleagues in recent weeks have advocated a patient approach, which I think is the right approach, by the way, in which they don't need to do anything in a hurry. And this kind of hurry up and wait strategy, I think, is leaning on the markets, and certainly the Fed have been notorious, predominantly with inflation, saying it was transitory in regards to not acting, and markets suffering at the hands of it, or consumers suffering at the hands of it. And there's a very pessimistic retail or consumer sentiment out there right now. In fact, we're at sort of 2020 lows, 2008 lows, lower than 2000s in regards to consumer sentiment from both earners under and over 100,000 in the United States. So today's going to be very interesting. More importantly for me, and we will stream it, is going to be what Jerome Powell says moving forwards. The markets are going to anchor on this either way. Bad news, I think, would equate to them basically maintaining the stance that they've had, and I think that could be a likely outcome. Good news would be any kind of okay, look, we're more willing to do cuts now, we might up the amount of cuts that we need to do, and et cetera, et cetera, et cetera. So this is going to be very important. We'll, of course, watch the market's reaction. This was interesting. This is from Polymarkets, which is essentially a genius platform, really, a great idea that allows people to bet on predictions, essentially. And this is one that says, will Fed NQT before May? And this is at 100%. Now, I'm not quite as convinced, but I do think they are going to end the rolling off of their balance sheet, and actually may look to swing the pendulum the other way eventually, and start actually to add to it. Certainly if you see any sort of further slipping in those markets. Let's now dive over to what Bo Hines had to say, who, of course, is the executive director of the Presidential's Digital Asset section.
We delivered on the president's promises that he made on the campaign trail. The president was adamant about creating the SBR. We wanted to make sure that we did it right in a way that respected Bitcoin for being so unique, and also gave credence to innovation in other spaces of the digital asset world. So, for us here, we look at Bitcoin, it's not a security, it's a commodity. It has intrinsic stored value that's traditionally accepted. It has, as David likes to describe, the immaculate conception. There's no issuer. And that's why, as you saw in the executive order, we compared this to digital gold. It's something that's imperative for the United States to have, retain, continue to build on. And I think that's worth pointing out that the way that this is constructed, we talked about ways of acquiring more Bitcoin in budget-neutral ways that won't cost the taxpayer a dime. And what I like to say about this president, I think it's high time that our president started accumulating assets for the American people, which is what President Trump is doing, rather than taking it away. And I think that's one thing that we really wanted to make clear in this executive order, and we're looking forward to working with our partners at Treasury and the Secretary of Commerce in order to find those budget-neutral ways in which we can acquire more. I've been asked all the time, it's like, how much do you want? I said, well, that's like asking a country, how much gold do you want, right? I mean, as much as we can get.
Very interesting. I just struggled to see the bearish outcome or the bearish narrative when it comes to crypto, but risk more broadly. And I think the kind of bearish outlook really centers around what Trump's doing. I think potentially more good is going to come out of that than bad. That's just my own opinion from an economic point of view. I'm in favor of reducing government spending. Of course, the markets have been amped up on it and are kind of addicted to it. But certainly, I don't think what I'm looking at is a drop in that and then nobody to fill that void. I think the private sector is likely going to fill that void. And I think actually what they're doing with oil and what they're going to do with oil, I think oil is going to come down drastically, is going to sort of spur on economic growth and productivity. So that was very interesting. I'm still very bullish on Bitcoin, of course. I think this pullback is still well and truly within the realms of normalcy. certainly from a technical point of view, we've got lots of technical targets taking Bitcoin higher, and it's going to take time to, a lot of these technical patterns, this cup and handle has taken a concession of years to form. You're talking nearly 4 years to form. It can take a while to play out, and I think the kind of waiting, the umming and ahhing is fatiguing many investors out there, and certainly in regards to the S&P 500, which sold off yesterday, which is why the crypto space sold off, because we're still very correlated. This pullback is still within the realms of normality. I'm hoping this is going to be a deviation and then continuation in regards to the range. This did pull back, double topped kind of in and around that inverse head and shoulders that we gave you guys back in 2023. But we will see. We will see. So I'm not that bearish whatsoever on the markets at all, really. I think you've got coins like Hedera that look great. I'm expecting it to bounce here. And we'll see if today's events are what's going to be the catalyst for continuation in what I believe is an uptrending market for risk across the board. Gold doing very well. I think gold, when you look at why it's doing what it's doing, you can sort of say, okay, well, there's a number of questions that get arisen as a result of this. What I want to do now is talk about a revelation that is reported to us by Rob Roos, who's essentially highlighting the fact that the European Union just yesterday has approved digital ID wallets. Now, this is kind of the evolution of the digital world, but there are cons to this in regards to your privacy, certainly financially, but more broadly, and we are moving towards, I believe, a kind of social credit score system. I think social medias play a role in that. Social media, certainly something like X. If you look at the kind of people, certainly here in the UK, that are actually being imprisoned as a result of what they've said on platforms like X and various others, these are very much crime scenes, and they're kind of creating low-hanging fruit for, I wouldn't use the word perhaps mavericks, but outliers in regards to the narrative and regime. Let's dive into what Rob Roos actually has to say about all of this.
I just left the room where we had the negotiations about the digital identity, and I have bad news. The member states and the European Parliament came to an agreement. That means that probably not far from now, the digital identity will be a fact in the European Union. Right after this agreement, Commissioner Breton said, now we have the digital identity wallet, we have to put something in it. And what he meant was the digital euro, also known as the central bank digital currency. And this is a very bad development. They always promise us not to make this connection. And even a lot of experts, privacy experts and security experts, warned also last week this is a very bad idea for our privacy and our freedom.
So I want to play that because it's important we keep you up to date what's happening in the digital world. And of course, this is following what Christine Lagarde announced just a few weeks ago. Let's go ahead and play that clip.
On your second point, I tend to share your views. Nature doesn't like vacuum. And we started working on the digital euro way back. Actually, when I started my term 5.5 years ago. And I'm not claiming, parentality on the digital euro, because my colleague Benoît Cœuré had already committed a speech on this matter before I arrived. But I certainly carried on with that project, and subsequently Fabio Panetta on the board, and then Piero Cipollone, who has replaced Fabio, have taken the lead together with a very, very good team, which is focused on accelerating the pace and hopefully campaigning enough with all the stakeholders, meaning European Parliament, meaning European Council, meaning European Commission, so that we can eventually, not put to bed, but put to reality this digital euro. The deadline for us is going to be October of 25, and we are getting ready for that deadline. But we will not be able to move unless the other parties, the stakeholders, as I call them, Commission, Council, and Parliament, actually complete the legislative process, without which we will not be able to move. And I think it is critically important. And it seems to the agnostic or the skeptics, it seems to be more relevant and more of an imperative now than ever before. both on the wholesale and on the retail level, both.
Pretty ominous stuff. This is really the evolution of money. You know, money is, if you look at money's evolution over time, you know, technologies evolve it. And often, you know, it's kind of like that old saying, you know, a weapon can be used for good and evil. With the printing press, you ended up with sort of notary currency. Then with the dawn of the internet, you ended up with digital currency. Now we're ending up with kind of central bank, stablecoin, crypto-enabled currencies. And it's really the evolution. This is coming whether you like it or not. But there are going to be casualties and some real cons, certainly for privacy and perhaps freedoms as a result of all of this, because they can literally, if they wanted to, just shut your account down and just take your money from you. And if they can program what you can and can't buy, how much you can and can't buy, you know, it's really about tightening, I guess, the noose around everybody's necks and making them subservient to the central banks and the bureaucratic governments that are sort of almost secondary to them. Also in the UK, bit of UK news, government launches procurement for digital gilt. Today, the Chancellor of the Exchequer, Rachel Reeves, boo. I'm joking. Well, I'm not actually joking. I'm not the biggest fan of Rachel Reeves or the Labour government, if I'm being honest with you, but that's just my own opinion. Announces the kickoff for the government's programme for its digital gilt instruments, starting with procurements. Last year, the Labour government confirmed plans to issue digitally native government bonds using blockchain as part of the Digital Security Sandbox, a temporary testing environment that relaxes a few laws. The UK is leading the way in digital innovation. No, it's not. And the creation of Digit will help to transform our world-leading capital market sector and drive economic growth, said Rachel Reeves. Just some interesting news we thought we'd share with you. A little bit of news coming out of David Sachs, of course, is the crypto czar. One of the early founders of PayPal, Peter Thiel, actually brought him on board. And I did we've just released the first part of our report on Stellar Lumens. That's really going to be exclusive for Patreons. It's about an hour long, and we cover kind of who's behind Stellar, who's involved in the team, what kind of partnerships they have that are interesting, and who the initial founders were. And you see the likes of Founders Fund, Angel List, PayPal, Stripe, etc., etc. So do become a Patreon and check that out. And of course, we've got a meeting tonight where we just address things more broadly and get together. President Trump has secured an energy and infrastructure ceasefire in the Russia-Ukraine war. First declaration in 3 years, paving the way for full ceasefire and permanent peace. He also secured Russia's cooperation on the Iran-Middle East extraordinary accomplishment. So we'll see how this progresses. Like I said, my personal opinion, and it is just my personal opinion, and I could be absolutely wrong, guys, and I'm sure many of you will tell me when that's the case, but I'm far more bullish on Trumponomics than I'm bearish, and that means I've got a positive outlook on the economy. That's it from me, guys. Let me know your thoughts on all of this, and I'll see you all in the next one. See you on the flip side.